Hi, once again, my name is Jason. Today we are going to talk about what is different between mutual funds and index funds. Picture this. If you walk into a grocery store and instead of picking individual items, you could buy a bucket that contains a little bit of everything in the entire store. That's basically what we are talking about today when it comes to investing in the stock market. Are you tired of picking waning stocks and constantly worrying about whether you make the right choice? What if I told you that there is a way to own a piece of the entire market without any of the guesswork? Yes, today we giving deep into the world of mutual funds versus index funds. By the end of this video, you will know your request. Do you know that the average person thinks mutual funds and index funds are completely different things? Yes, they think like that. But here is the plot twist. Index funds are actually a type of mutual fund. If that just blew your mind, you are not alone. Millions of people are confused about this exactly topic, and I get it. The financial world loves to throw around terms that sound super complicated. But today, we are going to clear these confusions once and for all. By the end of this video, you will know exactly what makes sense these two investment option difference. And more importantly, you will know which one might be better for your money. So stick around because this could save you thousands of dollars in fees over time. Yes. Now, you might think, okay, how this is going to work? Let's start with the basics because I know this stuff can feel overwhelming. A mutual fund is like a big pot where many investors throw in their money together. A professional manager then takes that money and decides which stock or bonds to buy. That's mutual funds. Think of it like hiring a chef to cook your meals. They make all the decisions about ingredients and the recipes. However, an index fund works differently. Instead of having someone actively pick and choose his investments, and index funds will simply copies what's already in the specific market. The most famous example is the S&P 500, which includes 500 of the biggest companies in America. When you buy an S&P 500 index funds, you own a tiny piece of all 500 companies automatically. How good is that? No guessing, no manager making decisions, just pure market exposure. Now, here where things gets really interesting, especially when we talk about the cost. You might think 1% fee sounds pretty small, right? Let me show you why that thinking could cost you big time. If you have 100,000 invested and you are paying 1% annual fee, that's 1,000 every single year going to fees. But here is the kicker. That $1,000 isn't just one for 1 year. That money could have been growing and compounding for over decades. Let's say you are 30 years old and that $1,000 could grow at 7% per year until you retire. By the age of 65, that's a single 1,000 could have turned into over $10,000. Now multiply that by every year you are paying those fees. That's a lot of money when you think about it. Index funds typically charge much lower fees, often between 0.03% to 0.20%. On that same 100,000, you might pay only $30 to $200 per year instead of 1,000. That's a huge difference, adds up to serious money over time. let's talk about performance, because this is where things are really eye-opening. Active mutual funds managers are trying to beat the market. They spend their days researching companies, analyzing trends, and making bets on which stock will go up. Sometimes they succeed and beat the market. But here what most people don't know. Study shows that over long periods, most active managers actually fail to beat the market. In fact, over 15 years, roughly 85% of actively managed funds don't beat their benchmark index. Think about that for a second. You are paying extra money for service that fails to deliver most of the time. Index funds, on the other hand, don't try to beat the market. They simply match it. And by doing that constantly with low fees, they often end up ahead of expensive actively managed funds. There are another hidden benefit that not many people talk about, which is taxes. Yes. When a mutual funds manager buys and sells stocks frequently, it creates what we call taxable events. Even if you don't sell your mutual funds shares, you might still owe taxes on the gains the manager created inside the fund. Index funds trade much less frequently. They only buy or sell when companies get added to or removed from index they are tracking. This means fewer taxable events and potential better after-tax returns for you. Let me give you a real example. Say you are investing in taxable account, not retirement account. An active mutual funds might generate taxable distribution that cost you hundreds or even thousands in extra taxes each year. Okay? An index funds tracks the same market might generate little to no taxable distribution. Over time, the tax efficiency can add up to significant extra money in your pocket. So when you could choose each option, if you want a simple low-cost investing with broader market exposure, index funds are probably your best bet. They are perfect for people who want to set it and forget. You don't need to reach to research manager or what about whether you are funds will beat the market. You just get market returns at every low cost. But there are times when an active mutual funds might make a sense. Maybe you want to exposure to a very specific strategy or market segment that doesn't have a good index funds option. Or perhaps you found a manager with a truly exceptional long-term track record and you are willing to pay for that expert. The key is being honest about whether you are paying for real value or just hoping for better returns. Before you invest in your fund, whether it's active or passive, you need to check a few important things. First, look at the expense ratio. That's your annual fee you pay. Second, understand what index or benchmark the fund follows. A fund tracks the S&P 500 is very different from one tracking small international companies. Third, decide whether you want a mutual fund or ETF version. Yeah? Because ETFs often have slightly lower costs and more tax efficiency. Remember, this video is for education purposes only. Your personal situation might be unique, and it's always smarter to talk with a qualified financial professionals about your specific goals and the circumstances. The bottom line is this: investing doesn't have to be complicated. For most people, low-cost index funds offer a simple way to build wealth over time without the stress of picking individual stocks or trying to time the market. Those seemingly small fees can make a huge difference in your long wealth. And the tax efficiency of index funds is just another bonus that puts more money into your pocket instead of the government. If this video helped you clarify the difference between mutual funds and index funds, hit that like button. Share it with anyone who is trying to figure out their investment strategy, and drop a comment below. Are you team index fund, or do you prefer active management? I'd love to hear about your investment approach. Remember, the best investment strategy is the one you can stick with for a long time. Furthermore, if you've been waiting for the right moment to begin, this is it. Take the first step towards financial confidence and long-term growth. Purchase your copy today at ffmmoney.com and start investing journey now. I have 2 ebooks. One ebook is Starting Investing Confidently, a beginner's roadmap to the stock market and financial freedom. In this ebook is the perfect guide for anyone who wants to begin investing with clarity, confidence, and purpose. It was designed for beginners, which breaks them down the stock market into simple, practical steps so you can take control of your financial future without feeling overwhelmed. Yes. And the second ebook, it's called Entrepreneur's Roadmap: Why You Should Start Your Own Business. It's very important. So in this ebook, the second one is a practical and inspiring ebook designed to help aspiring entrepreneurs take the first step towards building a successful business. If you have ever dreamed of becoming your own boss, creating financial freedom, and turning your ideas into something meaningful, this guide is for you. Inside of it, you will discover the mindset, strategies, and action steps needed to begin your entrepreneur journey with the confidence. It's very important you buy these 2 ebooks because they will help you. It's the ebooks that you can keep it on your mobile, save it on your computer, take it everywhere you want. And the good thing is, you read it whenever you want. Until you understand, then you can start making a decision. However, starting as quick as possible is what matters. Without further ado, follow our journey, connect with us on social media for daily insights, success story, and action tips that will accelerate your path to financial independence by visiting our website ffmmoney.com. My friend, don't let another year pass wishing you had started soon. The best time to begin building your wealth was yesterday, and the second best time is today. Remember, successful people don't wait for the perfect moment, they create it. Your moment is now. The Financial Freedom Mind team regularly invests in the same stocks and the assets we cover in our video. Why? Because we believe in what we are teaching. Warning: everything we teach or we say is for personal growth education. Do your own research. and think about what makes sense for your own financial situation. Investing has risks, yes. No one is going to guarantee you that you are going to make money when you invest, and that's the fact. Yeah, and you might even lose money, but I hope I can provide you with the tools you need to succeed in your journey. I have a mission to help you understand how you can better manage your cash. That's it. And if you still believe it's your time, just jump on our website, purchase our copy, for us on our Facebook FFM Connect page, and also please subscribe for our channel for more videos. And also you can write any questions, any comment, anything, or any other ideas you want me to cover in the next video, and I will see you next video. Fly like eagle. Thank you.